Hi guys, welcome back to the Blockkoin Academy. Today we are back with lesson 2. 2 days ago we did lesson 1, which was leverage and liquidation. Today's lesson is strictly based on position sizing as well as your risk per trade. So just like lesson 1, this lesson will be broken down into 5 simple steps just so that you guys can clearly understand how professionals control risk before entering a trade, and just to make it clearly for you guys. So step 1, this is where we define risk per trade. Risk per trade basically means how much of your account you are willing to lose in the case that you are wrong. Because as you know, or as you guys should know, all traders will have losing days, some even losing weeks, some even losing months. Professionals typically won't really have losing months just because over the years they've consistently managed how to control their risk and to control their losses. So that is what we will be trying to teach you guys today. So moving on into step 2. Step 2, I have 2 examples for you, client A as well as client B. So starting off with client A. Client A has $1,000 in his account and he risks 10% per trade, meaning 10% of $1,000 that he's risking is $100 risking on each trade. So if client A loses 5 trades in a row, he is now down of a total loss of $500, meaning he is down 50%. So the recovery required for him to get back to break even is 100% gain. Let's look at client 2, or client B I should say. Client B only risks 1% per trade, meaning that he only risks $10 per trade of his $1,000 account. So if client B loses 5 trades, just like client A, his account drops from $1,000 to $950, which is only $50, which is only 5% drawdown. So recovery required to get back to $1,000 for client B is only 5.3% gain, whereas client A needs to make 100% gain. So key takeaways for step 2 is small risk allows survival, large risk creates emotional damage. Moving over to step 3. Step 3 will be talking about stop losses, take profits, and how it determines your position size. So with a stop loss, your stop loss determines your position size, not your confidence. Your trade idea, if your trading idea is invalid below a certain level, that level defines your risk. Your position size must adjust so that if price reaches your stop loss, you can only lose your predefined percentage. That means before going into any trade, you should know beforehand how much you are going to lose if the trade does happen to go against you. And you should be comfortable and you should be stable knowing what that amount is. So let's have a look at the tools on TradingView over here. We have a TradingView chart fully implemented into the Blockkoin trading account. So for example, I'm going to use a short position, and as we know from lesson 1, a short position is when you are betting on price to go down, right? So this is the tool we use to look at our trades, just to monitor it in a picture format. Makes everything just a bit more pretty to look at. I'm just going to drag this down over here. So okay, we are going to look at the tools over here implemented straight from TradingView onto the Blockkoin account. So with this tool, I'm using the short position. I'm just going to click it over here, place my stop loss at above these eyes over here, and place my take profit all the way down to a 1 to 2 risk to reward. And if you don't know how to check your risk to reward, just look over here. It says your risk to reward ratio 2.01, meaning I'm risking 1 for my reward of times 2.01. Ideally, we always want to be having a risk to reward of 1 to 2 or 1 to 2 and higher. That just makes us control our risk, and consecutively in the long run we will just be much safer in the markets. So how does this work, right? In our red shaded area, that is when we are in a loss. In our green shaded area, that is when we are running profit. As you can see from my entry, where the red box and the green box meets, that is where my entry is, right? So as you can see, we were running quite a loss, almost hitting our stop loss, and now we were somewhat in profit, ran some profit over here, and now we're just sitting over here. So let's say price happened to go from here all the way up here, and it hit there, right? My trade would have been closed automatically just because I've set my stop loss at this particular place here. And you might ask, how does that help me in any way? So let's say, in example, let's just keep this level marked out for you. So this was my original stop loss. I'll delete this. I'll also delete this. So let's say, for example, price comes, price can hit here and can go down, but in lots of cases, when you get your trade wrong and you hit stop loss, in most cases price will go in that direction, in the direction that you did not want it to go in. Meaning, if you get it wrong over here, there's a highly unlikely chance that price is just going to reverse from here down. But price can actually go up and continue to go up, and eventually you can blow your account or lose a significant amount of money. So that's that stop loss and how it works and how it can control your account and save you some pennies and some time. Moving on, position size adjusts to risk. Risk does not adjust to emotion. That can now bring us on into step 4, which is control exposure on the platform. This quantity section over here, as you can see, this controls how big your position is. The bigger your position relative to your account, the more money you gain or lose for every small price movement. If I increase the size over here, even a small move against me creates a larger dollar loss. As you can see, when I increase it, the Bitcoin amount that I can buy goes significantly higher. So that means my exposure increases. Higher exposure means either a larger potential profit or, in most cases, a larger potential loss. And if I just bring this back down, smaller size equals controlled risk. We always want to be placing smaller trades just so that in the long term we can have safer trades and we can place more trades. Before entering any trade, position size must match your predefined risk percentage. Now we can move into another very important piece of trading, which is your professional mindset, which ties into psychology of trading. Trading is not always about being right at every given time. It is always about controlling losses when you are wrong. Before entering any trade, define your risk, not your target, your risk. I'll say that once again because I think this is very important. Before entering any trade, define your risk, not your target, your risk. So in the next lesson, we'll cover support and resistance so that you guys can begin building structured trade ideas. So that was all for lesson 2, discussing our stop loss and our risk management. So like I said, next lesson we'll cover support and resistance. And if there's one thing you guys can take away from this lesson is protect capital first, growth comes after. Alright guys, that's it for today. I'll catch you in the next one.